and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm happy to be presenting this week's topic, which is titled, Keep FOMO Out of Your Retirement Portfolio. And no, it's not a stock symbol found in the VectorVest program. Rather, it is an emotion that can derail your retirement portfolio if you are not careful. My purpose for this presentation is to urge patience and to adhere to the investment plans and risk management techniques that we encourage here at VectorVest when it comes to the more prudent, conservative investment objectives. Now let me say that again. I'm speaking to the retirement-minded, prudent/conservative investor. And the part of the investment plan I'm speaking of is the when to buy portion, which for our purposes is the confirmed call. Before I get started, let me just define the confirmed call in the VectorVest program. A confirmed up call is a signal given when both of the following occur. First, price. The price of the VectorVest composite has increased 5 trading day period over 5 trading day period for 2 consecutive 5 trading day periods, and the price of the VectorVest composite has increased from the prior day. Also, the buy-sell ratio has to be greater than 1. And when we look at a confirmed down, we simply flip the rules and a confirmed down signal is given when both of the following occur. The price of the VectorVest composite has decreased week over week for 2 consecutive weeks and day over day, and when the buy-sell ratio is less than 1. The VectorVest program offers several timing systems available so that we can recognize short, intermediate, and longer-term trends in the market. None of these signals should ever be ignored, but the signals that we act on is going to depend on our investment objectives. And these trends are the primary trend of the market. That's the week over week movement of the VectorVest composite. It's currently down. We have our underlying trend, which is based on the market timing indicator, which is currently below 1, hence the down situation. And then our confirm call is currently in a down situation as well. If I go to the graphs tab, the market timing signal not shown on the home page is our DEW timing system. And it's up because the price of the VectorVest composite had crossed above the 30-day weighted moving average, and the DPO, or the detrended price oscillator, is also in positive territory. Next, I'm going to go to our basic VectorVest MTI layout. For illustrative purposes, I'm going to take off the MTI, the buy-sell ratio, and the relative timing indicator, and I'm going to set it to a 2-year look back on the VectorVest composite. So what we're looking at are the confirmed call signals over the last 2 years. And the point I want to make here is that the VectorVest confirmed call timing system on the overall market has never missed a major market move, and it never will, simply based on the way it's designed. Now, can the confirmed call fluctuate at times? It can, but you can see, and this is just a 2-year period, we had a major market move at the end of 2018 that the VectorVest confirmed call signaled on October the 4th. It then signaled the confirmed up call and had a good almost 4-month run to the upside. And then yes, as the composite saw a little more volatility, it did fluctuate. It did not miss the move from October into the end of January of this year. And it certainly did not miss the sell-off that we've experienced since February 28th. What I'd like to focus on at this time is a more real-time view of what exactly is going on in the market, and again, address the more prudent, conservative-minded retirement investor. So since that drawdown, we know that the market had bottomed out here on March the 23rd, and it began to rise again. As I mentioned earlier, depending on your investment objectives, the VectorVest timing systems have been invaluable when we look at the shorter-term trends. If we had looked at the primary trend from that low, and you could have gotten in the market if you were a more active or aggressive trader, that would have been a great time to have gotten into the market. We look next at the green light buyer. We get a green light in the price column when the composite is up week over week and day over day. Would have gotten you in just a day or two later into the market. Still a great time to have been in the market. The DEW timing system. As I said earlier, it is the one situation that is currently up, and that was April 6th, and it still is to this day. that would have been a great time to get in the market. However, we haven't seen that strong V-shaped correction that a lot of folks look for after this type of sell-off. It has moved up, but the market has been in a slow trend here. The old saying, one step up, two steps back, it's kind of visualized here. The market would move up, we'd have a couple of big down days. Market moves up, these are significant down days in the market. The one signal since that low that has not been seen is the confirmed up call. And there's a reason for that. It's because the market has not shown that sustainable uptrend of that week over week for 2 weeks move. And what it certainly hasn't shown is the strength in the buy to sell ratio. The closest we came was back on April 29th when we did have week over week uptrend in the VectorVest composite. We were up day over day. What kept us from a confirmed call on that day was the buy sell ratio, which had peaked over the last month or so at 0.85 and then quickly resumed its downward trend to where it is now at just 0.38. The buy sell ratio is a very important indicator. We take the number of buy rated stocks in our program, we divide it by the sells, and it gives us that ratio and a really good indication of the underlying strength or weakness in the market. There are a lot more sell rated stocks than there are buy rated stocks, which leaves that buy sell ratio down at 0.38. Indicating to us that there is a concentrated group of companies that are driving this market to the upward trend that we are seeing to the extent that we are seeing it now. So again, the key is what happens is we start to fear that we're missing out on the rally that we usually do see after these type of sell-offs, like we saw after the October 2018 sell-off, and we fear missing out on that. Again, if you're more active or aggressive, the VectorVest timing signals are a fantastic way to take advantage of the type of market we're in now. But like it or not, we are living in times of uncertainty. And so for the more prudent-minded investor, we want to be sure to use the confirmed up call as our entry point into the market. If I go to the backtester tool, I ran a couple of backtests to try to illustrate the point I'm wanting to make here. What I've done is I've used ruler stocks, my very favorite search in the VectorVest program that brings back the highest ranked relative safety stocks in the program. And what I've done is I've run a backtest for the green light buyer, I've run one for the DEW and the confirmed calls. They're a little over 3 years. These are all model portfolios from our retirement coaching group. I used the January of 2017, so it's about going on 3.5 years now. So if I start with the green light buyer portfolio, we'll see for that 3+ years, we've got a 57.89% gain. That's 17.25% annualized rate of return. We do have a fairly large drawdown that we're going to see in any portfolio in volatile markets as we've seen, and I'll talk more about mitigating that drawdown in just a moment. Next, if we go to the DEW timing signal and we run that same test, we still have great results. 68% gain, that's just over 20% annualized rate of return. Our drawdown is much better. Still a large compounded rate of return, so a wonderful way to generate capital appreciation in your retirement portfolio. But here's the key. Over time, for the retirement-minded investor, when you use confirmed calls, over time you are going to outperform not only the shorter market timing indications, but also certainly the S&P 500. Now, we've got over 85% gain using the confirmed up call over roughly the last 3.5 years. We've got an annualized rate of return of 25.42, and again, the drawdown is there that we suffered in late February, early March. But that's a 25.5% rate of return. Just to put that into perspective, what I've done is I've brought up the SPX or the S&P 500 from January the 3rd of 2017, and if I run a quick test on that, we see that the annualized rate of return on the S&P 500 in real time is up 7.58%. 7.58% versus the nearly 25.5% return we have when we apply a prudent investment plan with the proper risk management techniques. So again, we've talked about the drawdowns here, and I'd like to paraphrase a quote from the great hedge fund manager Ray Dalio, when investing, you must be defensive and take on some degree of risk at the same time. And even the highest quality stocks are going to lend some risk because we are in the markets. He went on to say that if you do not take on that risk, you're not going to make money. And if you are not defensive, you're not going to keep your money. And to that point, I'd like to move on to the next important phase as we look at the markets in real time and we try to manage our way through these uncertain times and these uncertain market conditions. The key to protecting and preserving your capital is all about insuring yourself. And as we know, we have car insurance and homeowners insurance and life insurance, health insurance. Well, you should have the same concept when it comes to your portfolio. And when it comes to protecting your portfolio and preserving your capital, I want to illustrate the power of using protective puts. Now, I use this quote often when I talk about preserving and protecting your retirement portfolio. Mark Twain once said, "Don't just sit there and worry, be proactive. Do something, anything about what's worrying you, so that you can gain information, focus, and control over the situation." In other words, you need to be prepared to protect your assets. Well, how do we insure our portfolio? The best way to reduce the risk is by buying put options to protect individual stock positions or your entire portfolio. And again, these are the times that we see. This is the environment of the markets today that we talk about when the best time to get in on a market that looks like it wants to continue to trend upward from the bottom. But we also still have to be defensive so that money we do make that we can preserve, as Mr. Dalio pointed out. Here's a quick example. In the SPY, if I look back at a graph of the SPY, we know that we got our confirmed down call on February 28th. And actually, if we chose to strategically defend our portfolio even a bit earlier, on February 24th, we got the DEW timing signal to the downside. So either of those times would have been a clear signal to protect and preserve your capital. If I zoom in on that same graph and we talk about puts for portfolio protection, here's just one example, one illustration of the power of buying protective puts is on your portfolio. So we use the confirm down, and on February 28th, that signal went to a down situation. It was time to be proactive and place an insurance policy on your equity portfolio. That's a great time to place a put option on the SPY, or the ETF that tracks the S&P 500. On that day, you could have gone out and bought, even if I'll just use the example of one SPY March 296 put option. That is the at the money strike price. The SPY was trading right around 296. And you could have bought one option at $14 per share or $1,400 for one contract. $1,400 to protect your entire portfolio and at least mitigate the drawdowns that we are proactively attempting to manage. So what happened? Just a couple of weeks later, at expiration on that very short-term put option, that March 296 put was trading at $67 per share. Now, I'm not saying you would have waited right till 4 o'clock at expiration date to sell your option and capture that entire profit, but you certainly could have placed the option trade somewhere between that DEW and that confirmed down call. And even if you had captured profits on that put option anywhere in this area, you would have greatly mitigated the drawdown that you saw. In fact, at expiration, there was a $53 per share profit, or over $5,300, which is about 380% return on your investment. So that's just one illustration to show the power of being strategically defensive in your retirement portfolio. So my goal in this presentation was to alert you to 2 of the 3 core strategies we talk about in our Ultimate Retirement Solution course. And that is having the right plan for capital appreciation and having the correct entry point, again, given what the market's doing in a real-time environment, to have you at least aware of the situation. And then at the same time, given the uncertainty, while we wait to see when it's time to get in, we also have to have the same mindset as core principle number 3 of retirement portfolio management, which is preservation of capital. So be patient, enter the market by simply using the signals that the VectorVest program gives us. When that confirm call comes, we can feel much more comfortable knowing that the market was trending upward, and we can buy those safe, high quality stocks in a rising market and greatly enhance our probability and chances of continuing to make money in the market. And for those who might be interested in learning more about the 3 core strategies to grow and protect your retirement nest egg, you can stick around for an extra couple of minutes, and I'd like to tell you about the Ultimate Retirement Solution online course. It is a course that contains 6 modules that one by one build the foundation of all the important strategies you need to know to be able to grow your portfolio, generate a steady income, and most importantly, defend your portfolio. It begins with laying a clear path to victory in Module 1, Win Before You Begin. You cannot be successful unless you have defined your objectives and set clear goals. In Modules 2 and 3, we walk through very specific steps to show you how to build first a capital appreciation or growth portfolio, again by buying the right stocks at the right time and having the prudent plan for your management techniques. We do the same on the dividend portfolio. We'll walk you through the stages of building that safe, steady income flow using quality dividend growth stocks. Modules 4 and 5 are extremely important. First, in Module 4, we'll expand on the idea of income by using the power of selling covered calls. It's a great way for those approaching retirement or already in retirement to be able to continue that steady flow of income. We'll teach you the what, when, and how. We'll show you how to properly set up the trade, and then certainly how to manage that trade once you're in. And then I just gave a quick example of the power of defending your portfolio, understanding the power of protective put options so that you can insure your assets. Again, just the same way you insure your home, your car, your health, you should be out there insuring your assets as well. We'll show you how to do that. And then finally, in module number 6, we will implement the entire plan. We'll have a trading or investing checklist for you, and we'll go through the final steps in actually implementing your plan. Now, along with this course, there's a lot that goes with it. We have a bonus 6 live mastery support sessions. So the modules are in digital chalk. You can watch the modules, and then in the live mastery sessions, we'll help you implement what you've learned in those modules. We'll look at what you're currently doing and help to guide you. And don't worry, they are live sessions, but if you can't make it, we have them archived for you in that software. One of my favorite things to do is our retirement coaching group that meets every Tuesday afternoon at 2 o'clock Eastern Time. If you join the Ultimate Retirement Solution course, you will be invited for the life of that course, which is 6 weeks. We walk through our weekly retirement portfolio. We update each portfolio. We do our due diligence. Is it time to protect stocks because earnings are coming out? What is the market trend? Are we in a confirmed up or down? These are all the things we look at. We also will walk through a weekly covered call income trade as the market is open and walk through live trades. You get a special bonus module that'll teach you how to trade spreads for monthly income. It opens up another income stream. It's on top of the dividends. You've got covered calls, but we'll walk you through another great way using high probability trades. And that's a bonus module after the 6. And then we have our live stream. I get to walk up the parking lot here about 50 yards to our state-of-the-art training center. And for one day, we'll walk through all 6 of those modules as well as the bonus module. And you'll be able to join in. It's a one-day live stream. You can interact live with an extended Q&A session. It's a great time. You know, they say there is no such thing as a risk-free trade in the market. However, signing up for the course is risk-free because after the course is over, if you show you've done the work, come to the classes or watch the recordings, and you're still not satisfied, we will gladly give you a refund. So you can go to vectorvest.com/URS to sign up for the Ultimate Retirement Solution online course. I would ask the question, or more importantly, you should ask yourself, what will it cost you if you do nothing? How much will it cost you in time and energy to spend trying to do this on your own? How much money will you lose? How much potential profit will you miss out on? It's never too late. There's a saying that says the best time to plant an oak tree is 20 years ago, so that you can be sitting under it now to enjoy the shade. And we all know when the second best time to plant that oak tree is, and that is today. Now, the final special bonus here is if you order before 5 p.m. on Monday, May 18th, you'll get a special bonus. The price of the course is $595 is our early bird special. Actually, the regular price of the course is $995. sign up before Monday at 5 p.m. and we'll give a special bonus of $4.95 for the course. Again, go to vectorvest.com/URS. The course launches next Wednesday. We have our first live mastery session on Friday, May 22nd at noon, and then every Monday following at noon, again, will be our live sessions. We'll have the bonus session on July the 6th, and then Friday, July the 10th, we'll have our one-day live stream event. If you join, remember you do get access to both the course and the live stream event for one full year after the course ends. So we look forward to seeing you there. Thanks for taking the time, and please stay safe, stay healthy, and we look forward to seeing you the next time.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.